welcome, ladies and gentlemen, to another breakdown of the Forex market. This time around, we'll be focusing on um, gold versus the dollar index. For those who don't know, the relationship between gold and the dollar index is inverse in the sense that when the US dollar is pushing to the upside, we can anticipate gold to push to the downside because the US dollar is a cold currency versus gold as an asset in the market. So starting with the dollar index, which gives us the direction of the dollar. So what we are anticipating here, maybe step down to a 4-hour time frame. But from a high time frame perspective, I hope everyone can see that we have bearish order flow because we kept on breaking lows. So we had lower highs, lower low, lower high. I'd like to believe this is the same level as a lower low. However, we had a break of that structure. Go back to full screen mode. So we had a break of that structure to the downside. For me, it confirms that we have more bearish orders or orders to the downside, or the market will be pushing to the downside. I still believe we're going to break way further lower than 100, maybe to the areas of 98. That's where we have our demand level. So it'll be quite interesting to see how gold reacts to this kind of market direction, trying to find the imbalance template. So yeah, there we go. So after the change of character here, maybe let me go on a 15-minute time frame. So after the change of character here, because this was the last significant higher low based on a higher time frame structure, some can argue that it's this one right here, but I prefer to stick to the higher time frames to make decisions, and then I use the lower time frames to get those sweet spot entries that give me a high a low risk to reward to high reward trade setup. So this is what we're expecting on the DXY. So let us look at gold. So with gold, from a higher time frame perspective, I would say we are bearish. Why? Because we broke this higher low here. So this was the last higher low of this bullish momentum, and breaking that is a violation of market structure, which tells us that the trend is now changing. So with that said, we were left with this order block here, this supply order block here, which we're anticipating the market to come back to mitigate, and we have imbalance that we need to fill in. So more confluence building up to the story here, why we are going to be taking selling positions from this area. But a daily time frame is quite big of a time frame, if you may. The question would be, are we willing to wait for a couple of months or a couple of days, a couple of weeks before the market can mitigate that area of 2000? The answer is no, and there is something that we can still do based on this current major low and major high. So we're operating within this. So within this, it is very wise for us to look for the momentum within this range. So within this range, I believe that the momentum is pushing to the upside. So I think now we're trading between 1950 and 1990, or even 1975. Let's say 1950 and 2000. So stepping down to a 1-hour time frame, we can see that we had that break of structure. So that is confirming that we have bullish momentum here. That's a big confirmation that we have bullish momentum here. And then we have this area of demand. that was not mitigated. So I think right now what we are going to see is gold tapping into this area of around 1955, and then we're gonna see a further push to the areas of 2000. With that said, yeah, let's look at a 15-minute time frame to see maybe if we can get a clearer order block that was not mitigated. Stretch this a bit to the downside. And just to add confluence here, we have what we call quasi-model level right here, or a QML. So once again, it's still interesting to see how price will react to this. All right, so we have a QML there. It's a supply and demand pattern. We teach that in the course as well. So supply and demand is not just drawing your order blocks. It's a whole host of other tools that you can use to confirm your positions. So with that said, I'd like to go into a 1 hour and show you something that I saw earlier on. Personally, I really love following price action to the T. So we had this order block here that was mitigated. Yeah, I'm going to use a different template, just a hollow rectangle. Okay, there we go. And we had this one mitigated as well. So as that happens, we kept on breaking structure to the downside. Remember, we are bullish on the dollar index, which will help us push price on gold to the downside or to the area of 1950, 1948. That is where we are going to take our long position. So yeah, let's see. There we go. So with that said, I realized that we have this impulsive push to the downside, which left a huge imbalance right here. And right before that imbalance, we have this order block, which we can sell from. So before we push down to 1950, I also believe that there is a possibility that we can get gold pushing to this high and then down there. So yeah, as long as we have a 1:5 risk reward ratio, remember, we're good. So these are the kind of setups that I'm anticipating on gold. So for the long position, personally, I would like to buy at 1950. I really believe we're going to have a reaction at 1950. As far as my target is concerned, that I target this high or I go all the way up for 2000. So this is the analysis for gold. I'd like to hear your comments. What do you think? What do you see? If you see something different, yeah, let's discuss it in the comment section below. With that said, ladies and gentlemen, that's it from me. I'll see you on the live stream of the US session later this evening. All right. So yeah, there we go.